Hello everyone! We have been sharing stocks with explosive upside in this channel, and in today's video, we're going to talk about the stock that we've been sharing before. It's been up 43% year to date. It's related to AI. It has great catalysts and it's got price upgraded by Wall Street analysts. But before we get into the video, if you find any value in this, can you please smash the like button? It literally costs nothing, but it helps the channel out so much. And for anyone new, make sure to subscribe so you don't miss out on any new content like this. We are not financial advisors, so always do your own due diligence before making any investments. Now, let's get straight to the stock. We're going to cover Nebius Group. For those who don't know, Nebius Group, ticker NBIS, is a former Yandex company, which was their primary search engine for Russia, and effectively it was shut down in late 2021. Once, Russia invaded Ukraine, capital controls were put in place against the Russian equity base. But this company still exists, and the company did spin off their search engine business to a Russian consortium. They re-emerged as a standalone company once again. And now, Nebius Group is a Netherlands-based infrastructure company operating in the technology industry. The company is engaged in developing a portfolio of artificial intelligence-related technology assets. It is involved in creating an artificial intelligence-centric player to integrate the essential elements of artificial intelligence development with infrastructure, data, and advisory globally. It offers products and services such as a cloud platform for artificial intelligence-related workloads, development team services for autonomous vehicles, and development of generative artificial intelligence. Nebius builds full-stack infrastructure to service the growth of the global AI industry, including GPU clusters, cloud platforms, and tools and services for developers. The company is developing 3 other businesses that operate under their own brands: Toloka AI, TripleTen and Avride. It's basically now the company that sort of reinvented itself as an AI infrastructure company. NVIDIA found some value in Nebius Group, and NVIDIA investing in Nebius shows that NVIDIA is confident in Nebius Group, knows about this industry, knows what it takes to be successful in this industry. This investing does indicate a greater likelihood of success for Nebius Group because NVIDIA knows the AI industry. According to its 13F filing with the SEC, NVIDIA disclosed that it had purchased nearly 1.2 million Class A shares of Nebius Group during the fourth quarter, which is about 0.3% of the total holding of Nebius's group. It's a small holding for NVIDIA, but NVIDIA has it in demand for an infrastructure as a service company like this because one of the things that NVIDIA will do, probably over time, is they will start merging their hardware into software offerings, and this will be a software offering that they come together with, particularly in Europe. And Nebius also announced the launch of its first NVIDIA GPU cluster in the United States with a deployment in Kansas City, bringing its AI native cloud closer to American customers' workloads from early 2025. It has the potential capacity to house up to about 35,000 GPUs after expansion. Nebius Group said that based on the contracts they already have in place, their March annualized run rate of revenue will be at least $220 million, and they have even more potential contracts in the pipeline. By December 2025, the annualized run rate will be between $270 million to $1 billion. The company is growing rapidly and scaling very quickly. The other thing is the company also has a division of autonomous driving space. Along with the AI infrastructure business, Nebius Group autonomous vehicle developer called Avride announced a partnership with Uber Technologies. Avride is an education technology company, TripleTen and Toloka, a data software company focused on AI. So effectively, if you were to look at a company that could compare Nebius to in the United States, we really can't, because there's not a standalone company that we could pinpoint as just like Nebius, but they do have very similar attributes to companies like Snowflake, for instance. But there's also elements to Cloudflare or Symbol. There is obviously a lot of growth opportunities for this company in Europe, so it's more of a European-centric business. Some of their competitors are privately owned, by the way, and this includes some company called CoreWave and Northern Data out of Germany. But from our views, we don't see very many direct competitors to Nebius's group in terms of its infrastructure as a service or inference data as a service-based business. But at the same time, what's really happening here is that the shares were written off to such low valuation levels that we're actually seeing sort of an equilibrium established on valuation, compared to where the company was just going back to late 2021. In 2021, the company was worth enterprise value around $31 billion. Right now, based on the stock trading around $8.29 billion in market cap, it's trading at a third of where it was a few years back, but the company keeps buying back shares. However, they're not issuing new shares. They're selling shares in the company through private placements, raising cash to pay down debt. So it doesn't have any debt. They have about $2.2 billion in cash, which is really good for the company. They're growing their revenue, expected recurring revenue, to be about $1 billion by the end of the year. So it's not trading at a very extreme lofty price to sales ratio. You could say maybe 9 to 10 times sales right now based on 2025 earnings. Analysts have taken note of Nebius Group's potential, with BWS Financial raising the price target from $51 to $60 and maintaining a buy rating on the stock. This upgrade reflects confidence in the company's ability to achieve its projected annual recurring revenue, or ARR, of $750 million to $1 billion by the end of 2025. Nebius Group has demonstrated impressive growth with a significant increase in revenue driven by its core AI infrastructure business. The company's Q4 2024 revenue surged by 466% year-over-year, reaching $37.9 million, while the full-year revenue increased by 462% to $117.5 million. Despite the net loss from continuing operations, the company's strategic investments in AI infrastructure and cloud services have positioned it for future growth. It seems pretty solid right now, with a pretty consistent rally behind it. It's got good technical momentum for sure. As Nebius Group continues to expand its AI infrastructure and cloud services, it is well positioned for sustained growth and success in the future. Investors can feel optimistic about the company's trajectory and its potential to deliver long-term value. The future looks bright for Nebius Group, and this is an exciting time to be part of its journey. What is your thoughts about the stock? Buy the dip, while it pulls back like right now, or you wait for another entry point? Please share your thoughts on comments down below. That's how we trade as community. Thank you for watching. See you in the next video.